Hey, what's going on, everybody? Welcome back to another episode of Wealth Defense Radio, the podcast. I am your host, Josh Nahosa, and I am an independent advisor representative for SWAN DFW, which stands for Sleep Well at Night Dallas Fort Worth, the company that was started a little over 10 years ago.
Yeah, amazing.
And I am here with my co-host, a man who learned a very important lesson about knife safety while cutting open cardboard boxes yesterday. It is Hector and Josh.
And be careful. Don't ever bring the blade towards you. Somebody should have told me that more than 25 times.
Along with having a flesh wound on his thumb, he is also a certified financial planner, which is arguably more important for this, and that is the top mark in our industry.
Howdy.
So what are we talking about today?
Well, today we're going to talk about what happened last week. There was a bobble, and it became a panic, and we're going to talk about how bobbles are good and panics are bad. Yeah, we'll see if we can make some sense out of it, keep people focused on the real thing, on what's important.
But before we talk about that, we have our funny news story of the week, and for the second consecutive week, we are talking about chicken wings.
Yeah. Okay.
An Illinois school worker has received 9 years in prison for stealing $1.5 million worth of chicken wings.
$1.5 million worth of chicken wings?
Mm-hmm. What's your gut reaction on that? Feels like a lot.
Feels like a lot. I like chicken wings. I don't know that I'm $1.5 million into chicken wings. I don't know. I'm $1.5 million in anything. What? Did she eat them all?
See that? I don't think anybody knows. Let's see here. She was the food service director for a school district.
Oh, I see. And a wholesaler to other restaurants, probably.
Probably. So she ordered 11,000 cases of chicken wings over the course of about 2 years, it looks like, from about COVID to 2022-ish. The reason she was able to order any food during COVID is because some kids would still get lunches delivered to their homes, depending on the program that they're on.
Oh.
And so she was still able to buy food. Apparently, the thing that got her caught was they don't order bone-in chicken wings for their students. And so somebody looked at it and was like, that's weird.
Oh, really?
So that's how.
Last week. Wow. Well, sadly, in a related story, several chicken wing restaurants have closed.
Chicken wings are a big deal, I guess, in the last month or so.
In the 30s, it was alcohol. In the 2024s, it's chicken wings. Who knew?
Yeah, just Ocean's 11 levels of heisting are happening.
That's pretty funny.
Yeah, it's a pretty wild story. Back to the market. Monday.
Nice. Smooth transition.
There's no way to get out of that into.
Okay.
So, imagine that there was a good transition.
Okay.
Now we're back into our normal market talk.
Yeah.
Monday, there was a bobble.
Yes.
It seemed like the world was going to end.
Yeah.
The market was going to collapse. The American dollar was not going to exist anymore.
That's right.
Everybody was going to be homeless.
Yes.
America would cease to exist.
Grab your chicken wings and head for the fields, because it's going to be bad.
But that didn't happen.
It didn't happen.
The next day, we turned around, the market was up.
Yeah.
We're up again today as we're recording this.
Yeah, a week later. And so nobody knows for sure, so this is just conjecture, but what seems to have happened on Monday, and what's really frightening maybe, is that sometimes the markets are not very transparent. So we will know what happened last Monday in a year. or something. There'll be a filing somewhere. But what looks like what happened is two big hedge fund or mutual fund type companies or big investment houses had bought a lot of yen, Japanese yen, because they were that was really low interest rates. They had not raised their interest rates like the American economy had, or our Fed had. So they had bought that and used that as leverage to buy very high-end American technology companies. And when you are leveraged, if you go to a brokerage house and say, I have $1,000 to invest and I want to buy Apple because I think it's going to be a great company, they'll say, well, I'll give us your 1,000 and we'll lend you 1,000. And then instead of buying 10 shares, you can buy 20 shares. And most people say, well, yeah, let's do that. And so long the stocks keep going up, there's no problem. It's when the markets come down that you have to have, depending on what the agreement is, somewhere between 60 and 70% of liquid assets in the portfolio. So when the market came down, when it started to sell off, when the yen interest rates were raised, all of a sudden yen prices started to go crazy, and these people were leveraged to the hilt. They had to start selling stock to put the money back, and as the sell began, it just started in Japan and made its way all the way around the world. And like you say, by Tuesday, everything had settled. But there was still a lot of talk that our economy was a mess, and this was going to be a mass panic. And it got me thinking, there's been other panics that weren't panics in our history.
Yeah. Just to close the thought before we get into those panics.
Yeah.
We talked about, I don't remember if we talked about it on camera or on the mic or not. We talked about it maybe being a little bit of bad timing too, because a lot of the senior traders will go on vacation.
Yeah.
And so if you're a junior trader and are told don't
buy anything, you can sell stuff, just don't buy anything, then yeah, there was nothing to cover all the sales. Yeah, that's exactly right. It happens in August, and it happens the last 2 weeks of December. You'll see a lot of market volatility to the downside usually. Yeah, I don't remember it, but that's a good thing.
So panics.
Yeah, and so I got to thinking about panics that were panics that they weren't really panics. The very first one that, I don't think any of us were around, but we read about it when we were in school, is the War of the World. That was a radio show that was being run with very few commercials. And this was, I think, in the 30s or 40s. And people were hearing this, and it was a broadcast of a fake invasion. There was aliens landing, and people started believing that, and they started doing some crazy things, and they finally had to shut the thing down and tell people this was a show. Glad you were entertained, but don't run for the hills. And so that was a panic. That wasn't a panic. One that you lived through, you don't remember, Y2K. We were told on December 31st, 1999, when that thing flips to midnight, everything's going to shut down because of the way the dates were set up on computers. They weren't going to recognize that the world was going to end, and everything was going to shut down. There would be no lights. There would be no running water. It was going to be the end of the world, and it didn't happen. And I knew it wasn't going to happen, but still filled up a bathtub full of water, just to hedge the bets just a little bit.
I can recall a couple of different times in my memory that you have filled up a bathtub full of water because the world was going to end.
Yes, supposedly. And the other one was on December 21st, 2012. The Mayan calendar ended on that day. And I'm not a big Mayan kind of historian, but somehow you would hear television shows and the History Channel saying that they have been right about so many things and the math they had done. And so obviously they knew something, that on December 21st, 2012, the world was going to end. And that may have been another time I filled up a bathtub with water.
It's just possible. In case. Yeah.
But that was a panic. That wasn't a panic, and that was like Monday. That was a panic. That's not a panic.
Right. So all of those, we turned out fine.
Yeah. Yeah.
It was maybe a scare.
Yeah.
but no long-term effects were from it. The worst part was the build-up to it, the anticipation of it.
And on this one, it was a surprise. And it was a bunch of things coming together that made it bad. The underlying fear is that we're headed for a recession. You know, if you read, you know, or listen to a certain news organizations and stuff, this is the worst economy we've ever had, and you know, and it's not. The economy is actually great. It's doing great. It's slowing, but that may not be a bad thing. Our unemployment rate right now is 4.3%. Interest rates are going down. That's a good thing, especially for housing. And the 10-year Treasury now is under 4%. When somebody can put money in and get a risk-free 5% return, they take money out of the market and put it into a treasury where they can get risk-free 5% return, and that makes a lot of sense, and that's what hurt us a little bit on some of these downturns. When the treasuries drop below 4% and get closer to 3.5%, all of a sudden, that's not enough return to stay ahead of inflation, and so they're taking money out of those treasuries and putting it back in the market where you can outpace inflation. And so even though interest rates have not gone all the way down to where they were, they are coming and trending down, and that's a good thing. Consumer spending has slowed. You wouldn't be able to tell by the travel that happened in July 4th and all those holidays, but they're saying that Labor Day and looking forward, the airlines are saying the travel might be a little lighter. Still good, just lighter than the record-setting stuff that we've had. So, in this morning, the reason the NASDAQ's up another 300 points is that the wholesale inflation, or the consumer price index, the people that make things, that inflation was only up 0.01%, which is almost nothing. So it's in really good shape. So what we want to just reiterate to people is that we are in good shape. And if the economy slows, that's actually a good thing, because then the Fed will cut rates, which will lower interest rates more, get the housing industry going, move more money out of treasuries and into the market. You have more buyers than sellers, markets go up, and we'll be okay. The important thing to remember for Swan DFW, for us and our clients and our prospective clients, is that we're not a brokerage house. We don't trade. We're not in and out of the market. You know, if we make 3 or 4 trades in a year, that's a big thing for a portfolio. We're investors. We're long-term investors. We're basing everything off a financial plan, and we understand what's happening. And obviously, if things go and indications are really bad, then we might get out of the market for a while. But we never have. We've gotten out of individual stocks because we don't like what's happening. But we're not in and out of the market. We are not traders. We're long-term investors, and we're trying to satisfy a financial plan that the client we have put together for a client, and the client signed off, and that's our goal. So, yeah, panic when to panic, and keep your eye on what's important, and that's long-term investing.
Yeah, all of this ties back to having a good foundational retirement plan. And if that part's good, then the rest of it kind of takes care of itself. You want to stress test the plan, obviously, for these bobbles or even collapses or long-term downturns in the market. You hope that doesn't happen, but you want to make sure that you're going to be okay if it does.
Yeah. And it's not unusual. A 10% pullback is very normal and pretty healthy, because you get all of the new money that's come in because they think the market's never going to go down, and they've inflated the prices. We need it to take a breath. Those people get out of the market, and those of us that have been long-term will stay and be further ahead in 3 to 5 years than we are today, knowing there's going to be bobbles and bounces along the way.
Yeah. So if you would like to talk to us about retirement, or if you have questions about the market,
or bobbles,
or
panics that weren't panics,
or anything else that's money or retirement related, or college planning, whatever it might be, we have a couple different ways that you can contact us. The first way is info swandfw.net. That is our email address. That's info, like short for information, at swan, like the bird, DFW, like DallasFortWorth.net. The second way is a phone number, and that's going to be 888-SWAN-DFW, or for those of you that did not text in the early 2000s, that's going to be 888-792-6339.
Okay, well, that goes back a long way. Mm-hmm. In the first text thing, you didn't have just numbers and letters. You had to go through the A's where you text, you hit it once and it was A, and again 1 or 2. It was a mess. We've come a long way.
We have come a long way, especially in texting, apparently.
Evidently.
So, with that, thank you guys for listening, and we'll catch you all in the next one.
Yeah, thank you, and have a blessed day.
The preceding content is informational only and based on information available when created. It is not an offer or solicitation, nor is it tax or legal advice. It does not consider your financial circumstances and objectives and may not be suitable for you.